Hello everyone. Quick, simple and easy analysis on gold. It's Wednesday 25th of October, 5:27 as I start recording this video. Read my disclaimer please. I am not a financial advisor. Trade at your own risk. Like, share and subscribe. If you are new, welcome. I interpret the market as I speak with you about it. And let's begin. This is the 1 hour time frame. And I have here the maximum and the minimum that's been trading since last week. So that is why we have this range established. I have my Fibonacci retracement tool and I'm going to retrace to the 50% area, and that is going to be the key pivot area. Okay, so there are prices, pivot prices, but when it comes to ranges, the 50% is an area mostly. It's a range within a range. Anyway, we have been seeing the market in the past since Monday. This is Monday right here. Let's actually outline the week. Sunday and Friday is going to be right around here. Friday 4 p.m. Okay? And I'm actually going to also this is the middle of the week. I want to keep that just because I'm going to finish with something very interesting. Okay, if you follow me on Instagram, by the way, and I encourage you to do so if you look for me on Instagram, I published a few stories and we called out this fake out and this liquidity grab to then trace back into the 50%. I'm going to go into that in a minute, but you could have anticipated not only the fact that this was not the breakout for the market to retest maximum prices, but that it was mostly stop hunts, liquidity grab, pull back to the 50%. Once there, we could also have prevented us from buying too quickly because the market made a retracement into lower areas. Now, before we get into that, I wanted to show you the behavior of the market up until then so that we understand why this occurred, right? Because if we don't have the past understood, the present is usually more difficult. To start with, and not to make this too long, we have wicks over here that are clues. The market fails to trade back into this area, and when I mean area, I mean anywhere below these wicks and around that, okay? Price, as it was on the 50% range, notice how it just gets choppy up and down, up and down. The market closes, and now I want to show you something. I'm going to get close, and I want to show you what happened when the market closed below this area over here. So some brokers and some charts are not as clean as others, but there are prices that are being respected, and the closing of a candle and the opening of the next one respect that same price. In this case, this candle closes below the opening and the closing of these candles, and it closes and it trades into the area of these wicks. So that's also an intention of it trading lower. If this candle, had traded back above this area, for example, I'm going to switch back to there you go. So if this candle had closed above this support area and back into this range, then we could have anticipated a higher push, right? Because it fails to do so and it trades back to the lower price ranges. Notice what happens again here. This price where this candle closed and this one opened and it respects it. This candle respects it. but this one trades into these wicks and below them and closes below them, which is why the market kept falling down. It eventually bounces within this consolidation area, and what does it do? It respects the closing of this candle. Next candles, notice the difference. They don't trade any lower, and they close on the closing of this. So this candle stops. It doesn't close below the opening, below the closing, I'm sorry, of this candle. It rather closes above the candle itself, right? Making another bull candle. Same thing with this one. Trades down, retraces back up. There's another wick. Yes, this does close below the closing of this one. Therefore, the next one we have to be careful and study what happens. Another wick, and it respects the opening of this candle. Different would have been if it was like this, where it closes below the opening. Okay, so we see in this opening price, this one respects it and closes above it, which is why the next one just does another wick, respects this one, and then finally breaks out. So these are the type of clues that you want to get into, and again, in 5-minute and 15-minute time frame, you could see this better, but I don't want to get too much into it. This is what I'm focusing on now that I kind of gave you a pretty express idea of that. What are we seeing since this is Wednesday over here? Here it is. So midnight, London session goes into, but barely, this imbalance area, which is going to play a big part in New York session. Okay, so this is an imbalance area that we have to keep in mind, and we also have to keep in mind this support. Okay, if you follow me on Instagram, you see me publish a story where I had this mapped out and I was recording my screen with my phone, but I pretty much helped you understand what New York was going to bring, and that was a fake breakout to the upside to get stops and orders and induce buying, and then coming back down to the 50% area because there's an imbalance too close to where the market was, and in the idea of a bull market, there had to, and it would have been appropriate for a liquidity grab lower. In other words, whoever is investing millions of dollars, they don't want to buy within the 50% range of a range. They want to buy at the lowest possible point of a range, right? Or buy low, sell high, which is how anyone would want to do. Of course, it's difficult and different when you're moving either too little money or too much money. I don't want to get into that too much. What ended up happening was I was showing in my Instagram that we could expect a fast break of these resistance areas, and if the market did not consolidate around the areas of resistance, it would and it could possibly come back down quickly into the 50%. And once there, we had to study the lower time frames to understand, because here's what happens. This is the breakout, right? Now you're seeing the market turn back around pretty much at the same speed it went up. So now you're thinking, okay, is that a pullback? Is this like a second chance for me to come in and buy? What is that? To answer the question, we have to go into the 15 or 5-minute time frame. I prefer the 5 minutes because we're going to see something similar to what we were talking about in the past, which is why I wanted to explain all that opening and closing price of the candles. Here we can, actually I forgot something very important. Here, what I'm going to do is I'm going to put some horizontal lines on these key resistance levels. Just how the candles respect each other, they also respect these in different time frames. So Notice how in the 5 minute the market consolidates within that range of previous resistance. This is resistance, this is resistance. So because these different resistance levels were so close to each other, then this was appropriate to say it was a resistance range, which is why the market, when it traded back into it, it treated it as a support. So it kind of stopped there, and it was like making a decision whether to go up and down. It tried breaking up, but it traded back in it. Here it traded back up, but it traded back in it. And that's what I want you to see. The fact that it also respects this resistance price, and different to what happens when the market makes a clear decision on breaking up or down, it just made a retracement back into the range. So these candles respect each other. This one as well. This one breaks. Interesting. This is what we want to see, right? We think we could buy. But when we see this stop and close pretty much on the level of these two candles, we have to be careful, because the next one, if it doesn't trade above and higher and breaks this wick, then I shouldn't anticipate myself. And that's what happened. It actually traded down. And where did it trade down to? Not only did it go into the support, but it closed within that range again. So if this candle was gonna be a big bull candle, it wouldn't even have traded all the way down here. It should have only maybe traded to the closing of this candle and maybe to the lower of this wick, maybe. And then eventually break above this wick, right? That's what we should have seen if it was a change in direction upward. But because we saw that close back in this range, then this whole area is a danger area, a no trading, a wait and see what happens. And eventually, what also happened was that we lost volume. These two little candles, if the market was gonna again retrace up again and turn around and continue the momentum it went up with in the first place, these candles shouldn't have been that small. They would have been bigger and actually traded above these levels. But because they closed there, it's just, you're waiting to get killed either upward or downward. So, and that's actually what happened. And we traded downward because we had that imbalance area mapped out as an interesting and a better buying premium pricing for long positions. Obviously I wouldn't have told you, wait, the market is going to trade into the imbalance area and then buy the imbalance. I mean, you just have to wait and see that. You could anticipate it though. The fact that the market traded all the way up here and backed down so quickly and kind of stopped again in the 50% range or around it, it's like, well, what was that? That's a fake out. That's stop hunts. That's liquidity grabs, buying, inducement buying. So people trading with emotions, trying to buy over here and then getting stopped out. And the same method that is being used to do so is to the upside. It's used to induce selling. So market again trades all the way down to a very premium price. Nobody, maybe 1, 2 out of 10 or maybe 50 traders bought exactly here. A lot of people probably even sold, thinking that this was gonna break down and fall, free fall, right? But anyway, well, let's go real quick, 1 minute time frame to see that that push. So big candle down, this wick respecting that price pretty much. That's your clue, or that's your footprint that this just wants to maybe turn back around. And obviously this candle also tells me that this is not gonna break. If that was the case, these candles wouldn't have reached that high. They would have probably stayed there and kept breaking and breaking and breaking. So because we have a quick down and quick up, that is the same concept as this. Okay, so back to the 5 minute. We're almost done here. We're almost done. 5 minute of that retracement. Here it is. What happens? We trade back not only into the 50% area, pivot area, but we trade back above it. And where to? Look at that. Where that price respected that resistance, but we traded above that wick. So that's also saying, hey, I'm gonna go higher. The fact that this candle again stops there and it doesn't trade back into this area, and the next one opens and does not trade toward the bottom and rather goes up, that is also your, I guess, confirmation that this was just a premium entry, stop hunt, whatever you want to call it. And you could see this in the 1 minute. This is the 5 minute to visualize it better, but in the 1 minute, these candles are just like there, going up, up, up. They're not coming down. So that's what you gotta anticipate, what you gotta understand. Okay, so that's almost pretty much it. We're nearing market already closed on Wednesday for the stock market, so volume is obviously a little bit slow. Sydney's about to open, Asia's gonna open in a few hours, and what could you expect they do? I actually have a pretty nice idea over here already mapped out, and I'm gonna go in the 15-minute time frame and try to actually, let's go into the 30-minute. I think I did this in the 30-minute or 1 hour. Yeah, we could do it in the 1 hour. So 1 hour, I'm expecting, I would like market to come back down into the pivot area, respect it, knowing that we're already trading above it, and then Asia maybe trade back to retest New York's high and possibly breaking it, but not much higher than 1990, 1991. London maybe taking it down, and then we could see tomorrow morning New York doing something very similar, to maybe try to get entries around the pivot area, but not too low because they already came here this morning. I mean, again, this could happen again, but I doubt it. Maybe to the middle of the wick of that wick, so anywhere within this support. But it's not my favorite idea. My favorite idea would be that they do indeed chase a bit of support areas, but fail to break past the pivot area, the pivot area, and then bounce off of that toward toward previous highs. Okay, and then by the end of their market, probably close around here. We got another Asia session that could break up, and then London might also try to chase higher. This is just an idea, guys. I'm thinking out loud with you, but it is a pretty, I like this. And then I want to see something over here, something similar to this, like a big breakout and then a big pullback retracement of that breakout. You know, kind of like induce buying, and then getting everyone out here, just collapsing the market again. But this time maybe not too low, okay? Because this Friday would only take, it's pretty much the end of the month. So I'm trying to see price break, I mean close above the monthly pivot price, and that would be this one. That one right there. You see these two candles, how they respect each other? So that line that I put right there, that's the pivot price for the monthly chart. I would like to see that this monthly candle close either there or just above it. And my favorite would be above it, because I am bull on gold right now, especially because it's being driven by the unfortunate war. And if you haven't seen that video of mine, it's pretty much an analysis based on the war and how the fact that these events drive gold right now. This is the uncertainty and the the fear in the market that people tend to go buy these type of assets. Guys, I'm gonna leave it right there. I hope you've learned a lot and whatever. And yeah, like I said, if you are new to my channel or not, like, subscribe, share, comment. You can text me via Instagram, whatever you want. I'm here to help or whatever. If you want to trade, I don't know. You know what I mean. Um, but that's about it. Thank you for watching, and I'll see you next time, guys.